Welcome back to the deep dive. You ready to dive into some economics today?
Always ready to geek out a little bit about the economy.
Well, today we're going deep on the Bank of Canada's latest move, slashing interest rates down to 3.75%. And this isn't just your run-of-the-mill rate cut either.
Oh, no. This is the fourth cut in a row.
Right. And
And
to top it up,
it's double the size of the previous ones.
they really went for it this time. Big and bold. We're going to unpack why they made this decision, what they're hoping to see happen, and what all the experts are saying about it. So if you want to understand what's going on in the Canadian economy right now, you're in the right place.
It's a big move for sure, and I think a lot of it has to do with the Bank of Canada's main job, right? Keeping inflation in check.
Right. They're always aiming for that 2% inflation sweet spot.
Exactly. But here's the thing. Inflation has actually fallen below that target. It's sitting at 1.6% now.
Huh. So that's a key reason behind the rate cut then.
It's like a strategic nudge to try and stimulate the economy a little bit. You see, when interest rates are lower, it becomes cheaper to borrow money.
Okay, I see where you're going with this.
And that can encourage people to spend more, maybe finally book that vacation or invest in that home renovation they've been putting off.
I've definitely been putting off some home renovations.
Right, exactly. And it's not just consumers either. Businesses are more likely to invest and expand when borrowing is more affordable.
That makes sense. More spending, more investment, hopefully more jobs, and a boost for the whole economy.
Exactly. It's all about creating that ripple effect. But of course, there's always another side to the coin.
Right. What about the impact on the housing market? Wouldn't lower interest rates make mortgages more appealing and potentially drive up demand?
That's a great question. And yeah, the Bank of Canada is anticipating a rise in housing activity as a result of this rate cut. They're expecting to see residential investment go up as demand increases.
And one mortgage expert, Leah Zlatkin, she thinks this could be a game changer for buyers, especially in those pricey markets like Toronto.
Absolutely. Think about it. Lower mortgage rates could bring more buyers into the market, which, as you can imagine, could push prices up even further in certain areas. It's definitely a trend to watch.
So with the Bank of Canada openly saying they're on a cutting path, as Governor Tiff Macklem put it, does that mean we can expect more rate cuts?
Yeah, he didn't give any specifics about when or by how much, but he basically said to stay tuned. It seems like more cuts are on the horizon.
And the economists are backing that up.
Right.
National Bank and CIBC are both predicting another rate cut in December, possibly as much as 50 basis points. That's half a percentage point.
Wow.
They're saying the Bank of Canada's forecasts are a bit too optimistic and the economy needs a bigger push. So even though inflation is under control, the overall economic picture still looks a little shaky.
Yeah, and you can't forget about the rising unemployment rate. It's hitting young people and new Canadians especially hard.
Which makes the Bank of Canada's moves even more urgent.
Right. It's not just about boosting the economy as a whole. It's about making sure people have jobs and opportunities.
And Macklem himself pointed out that job creation isn't keeping pace with the growing workforce, so they're trying to tackle multiple challenges at once.
A lot to juggle, for sure.
Absolutely.
Yeah, it really highlights the complexity of it all, doesn't it? Managing an economy, I mean. Trying to keep inflation under control, trying to stimulate growth, and then making sure the job market is healthy. It's quite a balancing act.
And you know what makes you think? It seems like just yesterday, the Bank of Canada was doing the exact opposite, hiking up those interest rates like crazy.
You're right. Last year, inflation was the main concern.
Everything was getting more and more expensive.
Exactly. They had to try to cool things down.
So last year, it was slam on the brakes with the rate hikes, and this year, it's hitting the gas with the cuts.
It does seem like a pretty big U-turn, doesn't it? But that's kind of how monetary policy works. It's always changing based on what's going on in the economy. Last year, taming inflation was the top priority. Now that inflation has chilled out a bit, they've shifted focus to stimulating growth and tackling unemployment.
So it's kind of like trying to steer a ship through a storm, constantly adjusting to the wind and the waves.
I like that analogy.
Mm.
And I think this rate cut, especially one this big, it sends a strong signal to the markets and the public. But the question is, will it be enough to really jumpstart the economy and get those job numbers moving in the right direction?
Yeah, it's not like a guaranteed thing, right? Just because borrowing money is cheaper doesn't automatically mean everyone's going to start spending more or that companies will go on a hiring spree.
Absolutely. There are so many other things at play, like consumer confidence is a big one. If people are worried about the economy, they might hold back on spending even if interest rates are low.
Right. And then there's all that stuff happening outside of Canada, too, all those global economic factors we talked about earlier.
It's all connected. you know?
Like a giant spider web.
Exactly. You tug on one strand and the whole thing vibrates. Yeah. The Bank of Canada can control interest rates here, but they can't control everything that's happening around the world that could impact the Canadian economy.
So with all this uncertainty swirling around, what should the average person be paying attention to in the coming months?
Well, I'd say keeping an eye on economic news is always a good idea,
Mm.
especially any announcements from the Bank of Canada. Their next interest rate decision is in December, and that should give us a better idea of what they're planning.
So we'll see if they go for another big cut or maybe take a smaller step this time.
Right. But it's not just about the rates themselves. Pay attention to how businesses and consumers are reacting. Are people spending more? Are companies hiring more workers? Those are the real signs of whether the Bank of Canada's actions are actually working.
And for anyone out there thinking about buying a house or maybe already in the process, it's got to be pretty important to keep up with mortgage rates and how all this is affecting them.
Oh, absolutely. Mortgage rates can change pretty quickly, so it's crucial to do your research, shop around, and find a good mortgage professional who can help you navigate all the options.
It's all about being informed and making smart decisions, especially when the economy is a little unpredictable. I know this deep dive has definitely given me a lot to think about. Well, we've covered a lot of ground, haven't we? Inflation, interest rates, economic growth, unemployment, those global factors that are always at play. Managing an economy, it's no walk in the park, is it?
It really shows you how everything's connected, right? So many moving parts, things happening here in Canada and things happening all over the world, all pushing and pulling at the same time.
And right now, it feels like the Bank of Canada is walking a tightrope, trying to keep inflation under control while also trying to give the economy a boost. Makes you wonder, can they actually do both? Or are we headed for stagflation? You know, that nasty combo of slow growth and high inflation.
That's the big question everyone's asking, isn't it? Can they have their cake and eat it too? The thing is, there's no magic crystal ball that can tell us for sure. It all depends on how all these different forces play out in the coming months and years.
So I guess we'll just have to wait and see how this whole economic drama unfolds. But at least we're going into it with a better understanding of what's at stake and what's driving these big decisions.
Absolutely. And that's the power of knowledge, isn't it? The more you know, the better you can navigate all this uncertainty.
So to wrap things up, what's the one key takeaway you want to leave our listeners with today?
I'd say just keep your eyes and ears open. Stay up to date with the economic news, especially anything coming from the Bank of Canada, but also pay attention to what's happening around you. Are businesses in your area expanding? Yeah. Are people you know finding new jobs? Those real-life things can tell you just as much about the economy as any fancy report or statistic.
Great advice. So stay curious, stay informed, maybe even chat about economics with your friends and family. You never know what interesting insights might come up. Thanks for joining us on the deep dive, and until next time, keep exploring.